In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the on-chain data. So we will go and see how Bitcoins are moving on and off from exchanges. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting on the monthly time frame, what we can see by looking at the macro movements here of this market, we can see how the market has just tested and is currently rejecting exactly the previous cycle high. Now, from here, all the previous bear market was developed. Here we had the halving, the market entered into a bull market. Then we had the bear market that, in my opinion, ended exactly here with the test of the previous high. From here, I expect more bullish price action to be created, even though I do not expect the market to create new all-time highs before 2024, only after 2024 and the next halving. Only at that point, I expect the market to print new potential all-time highs. Now, dropping down on the weekly, what we can see is that from a weekly perspective, first of all, a couple of weeks ago, I spoke about the fact that I wanted to see the market create this move to the downside, to go and hunt all the stop losses that were below this low, before then creating a rejection to the upside, which is in fact exactly what the market did. We had the move to the downside that liquidated everyone that had FOMO'd into the market with leveraged longs and had their stop losses below this low. They all got taken out, and then the market created a move to the upside. Now, in a situation like this, where we just had an impulse, we could expect first a correction and then more potential bullish continuation. And if you have an impulse and you want to measure the correction, you have to take a Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement lining up at this area that we could expect this market to potentially go and test before then getting rejected to the upside. Now, if we go down on the daily time frame, what do we see? Now, from a daily perspective, the situation is quite different. We have a market which at the moment is clearly in a range. We have the top of the range here and the bottom of the range here. Now, until the market will remain in between these two levels, we could easily expect simply more horizontal movement. Now, if we get a break below the zone, we should wait first for the correction to the 0.32, then the break back above. So it's definitely something a little bit more that will take more time. So not really important to focus on that one right now. However, a closer scenario would be if we actually get a break above the high of this range. At that point, all this previous resistance would become support here. So if we do get the break after the break on the retest of this previous resistance turn support, this is where we would have quite good probabilities to see a potential rejection to the upside away from this zone. Now, if we go and see what we have when it comes to the on-chain data, so how Bitcoins are moving on and off from exchanges, what we can see here by looking at the exchange reserves is that the black line is the price, the purple line is the amount of Bitcoins on exchanges. The price has been dropping massively and the amount of Bitcoins on exchanges has been dropping even more. And even now that the market has started to recover, anyway, the amount of Bitcoins on exchanges is not increasing. Now, this shows that we're getting massive illiquidity. A huge amount of Bitcoins are getting bought and moved away from exchanges in cold storage. Now, what this creates is illiquidity, so that if demand gets increased or if the amount of Bitcoins emitted into circulation gets cut in half, price should increase to accommodate for that new demand. So we don't know if we will get a break to the upside, but if we do get a break after the break on the retest of this previous resistance turn support, how we could be approaching a potential rejection higher? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action during this retest from an intraday perspective, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.